Good evening, all. At the outset, I would thank Hiren Bhai, Akshat Bhai, and Mehul Bhai for inviting me to share some of the discussion on budget amendments under GST. And since we all know that uh, enough days has been passed, so everyone must be aware about the changes in the budget. So we try to cover some of the recent amendments under GST, which within 6 months that has been issued. And we will have the deliverable and discussion on the issues, practical issues that we are facing. And with the way we discuss the ongoing slide, I would request you that in case you have some of the questions in that, we will discuss at that time only, so that it will be fruitful discussion, right? So with this, I would say that broadly, as I discussed, I have covered two parts. First part, I will discuss about the budget amendments under indirect tax that includes GST and customs. And second is the recent amendment. We start with the budget amendment first. Hope I am visible, I am audible and visible the screen to the audience.
Camera.
Yeah, sure. Here, no?
Yes.
Visible?
The narrow.
Yeah, no. It's okay. Yeah, I think that's good to go. Charger. Okay. And parallelly, we will also cover two most important compliance that we are going to witness in near future with respect to our GST compliance. That is, first is IMS and ISD, right? So I believe that this is the request from Mehul Bhai per se, that the audience wants to understand ISD in particular. So I'll try to cover that too. So we start with the budget amendment first. Broadly speaking, there are approx 15 changes in indirect tax, but the relevant are majorly 4 or 5 changes. One obviously is with respect to the block credit, that is the 17.5D Safari retreat. We will see that what should be the way forward once we have retrospective amendment in the block credit provision. Credit note part is also there, which more sort of a procedural part. With respect to Schedule 3 entry also, there is one change, that is a no supply case that we will also discuss. Taxability of voucher is something which is I would say the point for discussion since long, and now that is more or less settled. So what change that budget has made with respect to the taxability of voucher, or I would say the time of supply for the voucher, that we will discuss, and few other changes, miscellaneous changes. If I talk about at a glance that main proposal or the main change that is coming under 17.5D, first I would say that we are regularly witnessing the budget so far as the GST is concerned in form of a GST council meeting, right? So budget changes is not something which is surprising, or we generally know that every changes has to be routed through GST council only, and GST council proposals are being enacted under the finance bill 2025, more or less. So we know that what are the changes that is going to come, but main important change is Safari retreat that we'll discuss. So far as the tax certainty aspect is concerned, as I said, the time of supply of voucher and Schedule 3 entry, that becomes more sort of a clarificatory in nature, so that the dispute, if any, will be resolved. Trade facilitation, that is something, though one would say that there is a change in pre-deposit quantum from 25% to 10%. But similarly, there is another way of looking at that. First, the only penalty case will be covered by e-way bill penalty only case will be covered by 25% pre-deposit. Now all penalty case will be covered. So that is another way of looking at this change. We will see that also. and new mechanism trace and track and trace mechanism is being implemented for few of the commodities that we will discuss. So far as the customs are concerned, two major change I would say. First change is the defining the time limit for provisional assessment. At least we have a time limit, certain time limits, time bound manner is decided by the government so that we have the visibility of our ongoing assessment. It may happen that the officer keeps on delaying, though there is a defined time limit by which on receipt of all the information they have to conclude. But we are seeing that we witness that it never ending, right? But now they have defined time limit so that at least we have a visibility and assurance that one fine day the custom authority will not come to us down the line of 4 or 5 years and say that this is not the correct classification, this is not the rate applicable to your case. So that is the main change. And second is voluntary revision of bill of entry and shipping bill. That is a very good and welcome change, I would say. So far as the customs changes are concerned, we will discuss the same in length. So starting with the first change, that is the 17.5D. I believe that everyone must be aware about what was the history and what gets changed, but for the benefit of all, at the cost of repetition, I'll highlight what was the issue involved and how is the present situation so far as the 17.5 block credit is concerned. We have two sections. I think I have, yes. Section 17.5C and Section 17.5D. Both provisions has been worded to restrict the input tax credit on construction of immovable property. As such, we all know that block input tax credit on construction of immovable property is blocked. But the same is not applicable in case of a plant and machinery. 17.5C talks about the works contract, whereas 17.5D talks about the case where it is not a works contract, but goods and services are being procured on my own. But here also they try to cover both the scenario and said that irrespective of any of the model, ITC on works, ITC on construction of immovable will be blocked. But in case of 17.5C, they use the word, this provision is not applicable to plant and machinery. Whereas while wording the 17.5D, they mentioned that this provision will not applicable to plant or machinery. Now, when we are discussing the difference between these two, that what is the difference between plant and machinery and plant or machinery, though it is obvious that the intention behind this provision would certainly to restrict the credit for immovable property only, and they are giving the leverage or the benefit to plant and machinery. But due to the word plant or machinery has been worded, the case goes up to Supreme Court, and Supreme Court determined that whatever you have mentioned, that has to be read. You have mentioned that plant or machinery, so you have to read plant as a separate word. Now, plant is very wider term compared to plant and machinery. When we are saying the plant, it may cover the whole structure, which may include some of the machineries. So that was the issue. And when the Supreme Court gave that judgment, everyone is trying to have the strategy that how can they leverage the input tax credit by deriving or interpreting their whole structure as plant, specifically for those cases where I would say that warehouse or the cold storage part is concerned, because this is nothing but the plant for them, because they have to construct in such a way that is built for the end use, for the purpose for which they are being constructed. But now in budget, and rather in 55th GST Council meeting only, they have clarified that they are going to change the definition, and they had changed the definition and they removed the word plant or machinery. They are saying that this is nothing but the plant and machinery, and that is a retrospective change. This we all know. What next? So there would be couple of situations, couple of permutation combination. First, let's talk about the case where people have obtained the input tax credit by construing that this is nothing but the plants. In Supreme Court has given that the plant credit is eligible, though it is obviously depends on the functionality test. You have to qualify your construction as plant first, and then only you can claim the credit. But had it been the case that, let's say, some have availed the credit but not utilized, some have availed the credit, utilized. After these changes, what the option available with these two people? So I would say that though the government has changed the definition of plant or machinery to plant and machinery, the main litigation is also on the word on its own account. If you read the provision, it says that goods or services or both received by a taxable person for construction of immovable property other than plant or machinery, which now we have to read as other than plant and machinery, on his own account. Now, something I have preparing, I am constructing on my own account, then this provision is restricting to me. They have not removed the word on his own account. So now in future, or rather henceforth, the litigation will be on the word on his own account. Let's say someone is letting out the warehouse after constructing, then they will say that the construction of warehouse is not on my own accounts. It is for someone else. Hence, you cannot cover me in this kind of situation. That is the first part. Second part, second part is movability. Something you have, when something is immovable, then only the same will be covered under clause 17.5c and 17.5d. The moment you classify any assets as movable, restriction will not apply at all. That is the first factor that we need to consider, and that remains as it is. So I would say that you see the Bharti Airtel judgment in case of a telecommunication tower. They have determined various case where they have determined various functionality basis on which they are saying that it is a movable. We are not talking about the telecommunication tower and sort of. We are having the clients whose ultimately or end construction would be maybe sort of some commercial construction or maybe some sort of warehouse, cold storage. We have to see whether any particular constructed assets is movable or not. Obviously, such kind of warehouse and cold storage may not be considered movable at all. But let's talk about a case where you are preparing one structure which is dismantled without any concrete damage and you can move it out. Then the benefit may be derived based on that. So this is the points to ponder after this judgment also and after this amendment also. So that is the first point. Second point is, since the plant and machinery has already been defined, and since there is a lot many discussion going on, and after that there is a change, I believe that there is a room for interpretation issue as well. So in near future, I would not surprise if government will come out with further explanation at what is called plant and machinery. Because when you read the word plant and machinery, that is a narrow interpretation. So these are the 2-3 aspects on which we need to evaluate our case, and accordingly we need to check for our client case. Particularly, one more point I would discuss, and I will end this discussion. Government has changed the mechanism of reading this definition retrospectively. Now we all know it is a well set principle that when there is a levy or when there is a liability, retrospective amendment is not possible and retrospective amendment is not advisable from the government side also. We definitely never expect from government that you provide some of the changes which is retrospectively applicable with, where taxpayer might have considered the same, because taxpayer is reading the law whatever written as it is. It is your mistake or the drafting mistake which you are changing retrospectively, then that is not permissible. So I would say that we will witness few writs on this case as well on this point. So that is going to be the future so far as the block credit or section 17.5d is concerned. Second change is with respect to credit note. So this is also nothing new. Credit note under section 34, there is a scope defined at what stage you can raise the credit note under section 34. Parallelly, whenever anyone reading is section 34, parallelly they have to read section 15.3 as well. Section 15.3b talks about the case where you are giving the post supply discount, and when you are giving the post supply discount, your valuation is going to be reduced. But for that, you are raising the credit note under section 34. So harmonious reading of these provisions determines that whenever you are raising any credit note for post supply discount, then recipient should reverse the credit. Then only you can reduce your valuation, because this is revenue neutral transaction, right? On one side, you reduce the liability, on another side, recipient reduce their ITC. So now there is no, as the input tax credit reduction language has been worded under 15.3b, but for that is only for the post sale discount. What about the other case? Other case, they have mentioned that the unjust enrichment should not be there. That is what has been written. So there is an interpretation issue as well. Though in my view, that is squarely covered, but to remove the anomaly, government has determined that let's amend the section 34. Now what they have mentioned? They have amended the section 34 by stating that when you are raising the credit note to recipient, obviously they must reduce the input tax credit. And when you are raising the credit note to unregistered person, then obviously the unjust enrichment should not be there, because with an unregistered person, they are not anyway going to claim the credit or not going to reduce the credit. So this is what the changes is. But points to ponder, or rather discussion point with respect to this change, is that under GST, there are various onus to prove. Onus to prove is the section worded under the GST where, so far as the input tax credit is concerned, the onus to prove is on the recipient, right? That he should not have the claim the credit, or he, whatever credit that he has claimed, he has to prove that he has claimed the credit rightly. Similarly, when there is a allegation of tax liability, the tax liability onus to prove is on the department. The department have to prove that there is a tax liability because of certain XYZ reason. Now, you read that provision vis-a-vis this section 34, which talks about the case where, being a supplier, I am supplying goods worth 100 rupees to Akshat Bhai. Due to some reason, I need to raise the credit note of rupees 10. That being a supplier, I need to ensure that Akshat Bhai has reduced the input tax credit with respect to that 10 rupees. So there is a disconnect between whatever written under section 155, I think, on the onus to prove, and whatever written in on this. So to mitigate that, the government has already issued circular 212, wherein they are saying that you have the option to opt for CA certification in case your total tax exposure for the year is exceeding 5 lakh rupees, right? And in case below 5 lakh rupees, you have the declaration from the recipient itself that they have reversed the credit. But I would say that that mechanism is via media. It is not the concrete mechanism that has been provided, that at the time of raising the credit note, because I need to adjust my tax liability in this month only, I might have allegation from the department, and at that time I will opt CA certification or the recipient certification at a later point of time. But here, there is no concrete mechanism as of now. So what is the mechanism? Now I touch upon the point of IMS, Invoice Management System, where we all know that we need to follow certain steps, and then only our filter to be will be generated. So when we are discussing about the credit note vis-a-vis the IMS, we all know that we can have pending action on the invoice, pending action on the debit note, but we cannot have the pending action on the credit note. We have to either accept or reject. the credit note, right? The moment I accept the credit note, that means I am accepting the credit note of my supplier. So that automatically means that whatever credit note I have raised under section 34, that is being adjusted. And I presume that since the recipient has accepted the credit note, he will reduce the ITC on that front. So this is what the interlinking of this provision. We all know about circular 212, so I am not touching upon that. The only point so far as the post supply discount is concerned, we have seen during the GST assessment that there is a scope defined under section 34 that on what basis you can raise the GST credit note. Otherwise, you need to raise the commercial credit note. That has been extensively discussed under circular 92 as well. What happens generally for advising to your client perspective, whenever you are reviewing the data of your client, at that time, equal weightage should be on ITC part and liability reduction part. Because when, as in today's era, I don't think that there will be any misliability on outward supply side, because everyone knows that this is the supply and this is the classification and this is the rate applicable. So it hardly would be any situation where your outward supply will be missed from tax liability. But when you are discussing about the reduction of that liability, this is nothing but the one of the gray area where department is constantly focusing on. So at that time also you have to see that whatever credit note that has been passed, or particularly GST credit note that has been passed, whether that is in compliance with section 34 or not. Generally what happens that year-end adjustment between supplier and customer will be routed through GST credit note by describing the same as post-sale discount. But you have to be mindful of the fact that whenever the authority will ask for the base for that credit note, at that time you should have the base which is mentioned under section 15(3)(b) vis-a-vis section 34, and you need to justify that claim that whatever reduction in output liability, that is genuine, right?
That condition has to be agreed at the time of supply.
So I would say, sir, कि એવું છે, but that is not being communicated to any authority, right? That is between you and me. So થાય છે શું આમાં કે સપોઝ આજે તમને ક્રેડિટ નોટ ઉપર ક્વેશ્ચન આવ્યો, તો you have to produce some documents, right? So what you produce? You will produce the documents which is internally generated document between you two people. And even if it is not there, you prepare at that time. Because there is no mechanism that at the time of supply, I need to provide the corresponding declaration or any scheme that whether this scheme is coupled with any post-sale discount or not. Because that is something, two conditions are there, rather three conditions. First, I need to link the invoice. I need to link the credit note or discount with the main supply. Because until and unless that is not there, you cannot say that it is a credit note under section 15(3)(b), right? Ad hoc discount તમે આપશો, so that is not the post sale discount which is liable or eligible for section 15(3)(b). So that is the first point. Second point is that obviously there has to be some contractual arrangement, and that's what I think you are discussing. And that for that, whenever you are advising your client or whenever you see the data of your client and there is a reduction apart from the sales return and damage parts, which is very obvious that it is bound to happen for section 34. Ideal practice should be that you prepare that sort of document at that moment only, and you keep documented the same. Otherwise, let's say audit comes after the let's say down the line of 3-4 years. At that time, you may not recall that what was the exact scheme and how you calculated that discount. Right?
Or then it is advisable not to reduce the output tax liability.
So that is a commercial call. So that is a commercial call. I mean, ઘણા લોકો રેસિપિયન્ટ ને રેઝિસ્ટન્સ હોય છે. સપોઝ તમે ક્રેડિટ નોટ આપો તો એ કે છે તમે જીએસટી ના તો રૂપિયા મારી જોડે લઈ લીધા, કારણ કે તમે કમર્શિયલ ક્રેડિટ નોટ આપશો તો 100 રૂપિયાની જ આપશો, તમે 118 ની નહીં આપો. So he would say that unnecessary I have to bear the 18 rupees burden. So that remains the challenge between supplier and recipient. So that is totally a commercial call. But yes, the safe side would be that if possible, in such kind of a scenario when there is a dilemma, commercial credit note is always advisable. This is what the section 155 that I am talking about, that burden to prove is on recipient. But now here they are indirectly saying that as a supplier, you also have to be mindful and you need to assure yourself that the credit has been reversed on. And I think this circular is also gets challenged in various high courts that it is not practically possible and you cannot have the via media solution. You have to have some concrete solution for the same. It is not something which is practically possible every time. I mean, you cannot go to every recipient and ask for the certification, right? Had it been the case that you change the chair and someone asks the certification from you also don't know, na? And being a chartered accountant also, you are not sure whether the input tax rate that is reduced by your client that is with respect to this trade note or some other trade. So that is risky on our part also to give the certification on such kind of issues.
I think that is why they are introduced to IMS.
That is why the IMS is, yes, certainly. Okay, so there is one another change with respect to Schedule 3. The entry supply of goods warehouse in SEZ, FTWZ before clearance for export or before clearance for DTA would neither be a supply of goods or supply of service. That is also retrospectively added. We all know. So, but what is the logic and what is the rationale behind that? So we all know that Schedule 3 is the transaction or the activities where it is not considered as goods or it's not considered as service. The entry 8A is mentioned that supply of warehouse goods to any person before clearance for home consumption. This is the entry that has been worded. There is a dilemma, many dilemmas so far as the person who is engaged in free trade warehouse zones and storing the goods and supplying the goods from that and or SEZ. Because the whole scenario is like that, the warehouse goods has been defined. Warehouse has been defined first under Customs Act. Warehouse means warehouse, private bonded or the public bonded warehouse. And warehouse goods means the goods that is warehouse under the such kind of warehouse. That was the entry. But that entry belongs to the Customs Act. So now indirectly, this whole provision is being governed by the customs. But if you are storing the goods under SEZ and FTWZ, that is not directly covered with that provision. So there is a dilemma whether the exemptions or the Schedule 3 benefit will be available to the goods which is warehouse under SEZ or FTWZ or not. That is the question which everyone is facing. So now they have removed the anomaly. Basically, I would say that since last few GST Council meetings, if you see the trend, they generally pick the area which is highly litigated and highly interpreted. They pick up that area and they give the clarity. It may possible that they might consider the same as taxable, like our plant and machinery plant or machinery. But at least they are trying to clarify. So this is also the area which the debate is going on whether this will be taxable or not. And they have added the word that added the entry in 8AA by stating that such kind of goods. So I would say that before you supply and supply, in between transactions will not get taxed.
Just like
Right? Yes. So another points to here is that since it is Schedule 3, it is not a supply of goods, not a supply of service. So should I reverse the credit with respect to this kind of supply? That is the question. So when you read the ITC reversal, common ITC reversal provision, that is still attributable to 8A and that too only duty-free shops only. It does not cover 8AA. So on this kind of transaction, the ITC reversal is not required. I would say very limited applicability of this provision because we may not have a continuous transaction of this sort. This generally would be the case where the foreign company is supplying the goods to for any free trade warehouse zone, and subsequently they are supplying to someone else for home consumption or the export, they are directly covered by this particular change. There are a lot many open questions. They have also said that in case you consider this transaction as taxable because of the dilemma, you may have taken the safe call and you consider this transaction as taxable and paid the tax. What about the refund of that tax? Because that is not taxable since retrospective effect. They are clarified that it will not get refunded. So that is also very clarified. But until and unless the unjust enrichment has been enforced or unjust enrichment has been encountered, is there any room for getting the refund? That is the points to ponder, or that we need to think in case you have come across any such kind of case. Similarly, there are open issues. Let's say if I'm moving my goods from free trade warehouse zone to mover, whether that will be considered, that will be covered in this provision or not. I believe that few clarification, particularly on those issues, apart from the normal transactions, is expected from the government. Vouchers. Till now, we all know that taxability of vouchers is going up front and down since very long. And recently, there are many judgments has been pronounced clarifying the position of taxability of the vouchers. You can see that Premier Sales Promotion 2023, Karnataka High Court says that voucher is money and it's not supply of goods or service. Kalyan Jewellers also says that it's actionable claim outside the ambit of GST. In nutshell, what the conclusion has been derived so far as the vouchers are concerned, that it is nothing but the prepaid payment instrument or actionable claim at the max. So underlying supply of that voucher will be considered as supply when ultimate goods or services has been supplied, and not at the time where you are issuing the voucher for that goods. That is first point. And for that only circular 243 has been issued, which clarifies all the doubts that why the same will not be gets taxable and what is the rationale behind the supply of voucher. That is first point. Now, since the voucher is not taxable, obviously the time of supply of voucher is redundant. And that's why they remove the time of supply provision. This is the change that has been come in the budget, right? There is a change in the definition of local authority. They have introduced, they have provided, explanation has been provided that local fund and municipality fund is also considered as local authority, not much relevant, but relevant only for the cases where generally you are having transaction with the government, and that too with such kind of entity which is not directly covered as a municipality authority or the local authority. You might be having some kind of a transaction with with such kind of a fund. In that case, this is the explanation has been provided. So the meaning of explanation is that it is a clarificatory in nature, and applicability of this change is from day one. So in case, let's talk about a case where your transaction gets covered by this particular provision, but you have not paid the tax, and you are supposed to pay the tax. Then on one point of view to looking at this is that your liability will crystallize at that time on which you have not paid. So this is only one of the point which you should consider, not much relevant. This track and trace mechanism has been provided under other foreign country law also. The idea behind this mechanism is to track and trace the value, high valued goods or the goods on which the duty is higher. They just want to ensure that whenever you are moving that goods, there is no lacuna in the chain and there is no revenue loss to the government. This is the very basic purpose of track and trace mechanism. This is, though they have not notified, but what the modalities will be, that they have determined certain class of person or class of goods which they have to follow this trace and track mechanism. They need to provide some unique identification marking on the particular goods. Whenever the goods are moving, they need to report or they need to mention that unit identification marking. Based on that unit identification marking, government will know the complete supply chain where the goods have been moved and at what stage the tax has been paid. Right. So this is majorly applicable as of now. What have been heard is that as of now, it is heard that it is applicable to plant, masala, tamaku, etc. But I believe that these may be applicable to metal and iron. That sort of commodities also the commodities which are under the radar of the government, and they might come out with such kind of scheme for such goods. Important point to note is that if you don't comply with this provision, then the penalty under section 122B has been imposed. And the penalty says that 1 lakh rupees or 10% of the tax payable, whichever is higher. Now, the only concern is that as of now, we don't know that what sort of commodities are getting covered. So we don't know whether that will be applied to our client or not. But having said that, generally this will be applicable to those commodities or those goods where the duty is very high. So imagine a situation when you have one particular commodity on which the duty is very high and you don't follow this. Then on higher duty also, apart from the general penalty which is there already in the GST law, you need to pay over and above the penalty under section 122B. So non-compliance will be very risky in such kind of a situation. That's what I want to highlight. Pre-deposit. So we all know that whenever we are going into appeal, we are supposed to pay certain amount of pre-deposit. Generally, under the e-way bill, since earlier we all know that when the vehicle has been detained, they used to demand tax as well as penalty. But the problem is that you are moving the goods now. You are going to make the payment of that particular tax in subsequent 3B. So how can you pay tax at that time only? So there is a provision that 100% tax, 100% penalty needs to be paid at the time when your vehicle is detained. Now they know this issue and they change the provision by stating that you have to pay 200% penalty, right? So that is okay. So generally, in case of a e-way bill, only penalty needs to be paid. Tax you anyway going to pay while filing your GST at 3B because that is your outward supply, provided it is your outward supply, not inward supply. So what happens that in case of a e-way bill provision, they have imposed the 25% penalty few times back. Now, which they reduced to 10%. That is fine. That is a welcome move. But they are saying that it is applicable to other cases also, not just the e-way bill case. So I would say that this is also a draconian provision because let's talk about a case where you have not paid or you have claimed the excess credit. You have already paid the tax. You have already paid the interest. Only you are fighting for penalty amount. But since you have already discharged your liability, then obviously there is no need to pay pre-deposit also on that particular penalty amount which you are fighting for. Because government has already received the tax part. Government has already received the interest part. And anyway, in case the case is strongly defended by the government, then government will anyway get the penalty. But still to fight that penalty, you need to pay 10% again as a pre-deposit. So that is something draconian provision that they have introduced. And in case when you are going above, that is up tribunal level, then additional penalty of 10% that is also required. So this is what the penalty changes are there. ISD. I have covered few slides on ISD, that how ISD will go and what's our way of thinking on ISD and how we should advise our client because that is going to be mandatory from April 2025. The limited change that budget have made in this ISD provision is that the way definition has been worded, it is mentioned that RCM transaction, but that is the intrastate RCM transaction can be covered, and not interstate. Now they have removed the lacuna and they are saying that not only 9394 but 5354 can also be applicable of IGST Act. The moot question will remain that who will pay the RCM? Under ISD, I have my normal registration. I am obtaining my IST registration as well. Now, who is going to pay RCM in case the liability is going to be discharged? Let's say I hired one advocate for all my GST advisory. I am taking the advisory from that advocate, and certainly this is a common service for my all location. So I'm going to distribute the credit to all, but who is going to pay RCM? That is the question that generally is being heard amongst all of us. That I have also mentioned at the last.
એમાં સર જે અત્યારે એક સ્ટેટ પે કરે પછી બધા વેચે એવું કન્ટિન્યુ કરવું પડશે ને કે આમાં આરસી આઈએસડી ને લોકો અલાઉ થશે પેમેન્ટ કરવા.
See, ISD cannot pay any tax. ISD's role is only to distribute the credit. So the modalities will work out that HO will have the invoice of RCM. HO will discharge the RCM and HO will raise the invoice and passing the distribution. That is what the up till now the this is the case where let's talk about a case કે HO છે, HO એ એક લોકલ એડવોકેટ જોડેથી બિલ લીધું છે અને એનો CGST ને SGST નો RCM નો ઇન્વોઇસ એ રેઝ કરે છે. That is covered. પણ એને સપોઝ interstate RCM નું બિલ લીધું છે ને એ એને રેઝ કરે છે તો that is not covered, that they have removed. So this is the only limited point. Talking about IMS, જ્યારે IMS આવ્યું તો બહુ ફાસ્ટ આવ્યું હતું IMS જ્યારે હમણાં ઇન્ટ્રોડ્યુસ કર્યું અને they are so like they're going to implement very soon. Actually, they are working on it very fast, and I believe that IST and IMS, both the things that we have to face in these 25. Talking about the IMS, when the IMS has been introduced and the government is saying that you need to have the action on each of the invoice, then first question in our professional mind will arise that what is the legal framework of this and how the IMS will derive? Is there any particular provision? So they have carved out that, and whenever there is a auto-generated GSTR to be, they have replaced the word statement. This is nothing but the IMS only. And in a way, they are trying to get the legal framework of IMS in the law. So one would not say that it is not illegal. So one fine morning, any advocate will not go to the High Court and say that this is not legal, so you stop that. So they try to come in case, in fact, they have also added under section 39 one additional condition also, like whenever you are filing your GSTR 3B, they can impose additional conditions while filing GSTR 3B. So that they have also added under the legal framework, so that they, in case they want to have anything, like as of now, I would say that you cannot file your GSTR 3B if your GSTR 3B of earlier month is not filed, right? So that is governed by the GSTN. But what is the legal framework or what is the legal rationale behind that? So they have introduced that. So they can use that and have the savior. So that is all for so far as the GST part is concerned. I think we can discuss in case anyone have any doubt, or else we move forward to customs.
So this is section 155. That the taxpayer has to do this. So is it a clarified in nature or it is now prospective? Because generally what happens in GST assessment, they catch recipient from BUA and they demand tax and interest from recipient only. They are not going to.
No. So 155 is general provision where the liability has been casted. It is only the, I would say, the ownership has been defined, that who is the owner of this particular. When one fine morning, department will say that you need to pay 10,000 rupees. Then department have to first prove that you are liable to 10,000 rupees, and then only my action will start. So that is so far as the liability part is concerned. So far as the ITC part is concerned, since ITC is anyway is a right of any taxpayer, not legal right, I would say, but the beneficial right. So when the recipient is claiming the credit, then obviously the onus is on the recipient to prove that whatever ITC I have claimed, that is a legal and eligible. That is the point. Now, linking the same with section 34, when the liability has been casted on the supplier, that you need to ensure that your recipient has reversed the credit, I would say that is a disconnect. But that disconnect gets resolved by way of a IMS, because recipient, whenever the recipient will issue any credit note, obviously the same will be prompted to the recipient. And the moment recipient has accepted, that means it is obvious that he has reduced the credit. But problem would arise if he reject. And I think that is the limited point of IMS when the industry is struggling. That what if એને તો રિજેક્ટ કરી દીધું પણ તમારી લાયબિલિટી તો એડ થઈ જશે, નેક્સ્ટ નો એડ થઈ જાય. So now in that case I would say that you are not fulfilling the condition of section 15(3) also, right?
So
Because he himself at that moment is saying that I'm not going to reduce my liability, ITC. Right?
After IMS, that's clear.
Correct. But there is a gray area as of now. So
What about past appointments? In that case also,
that case you have the benefit of that circular 232, where you can have the option of certification from chartered accountant. Or I would say that even if you provide the cross ledger of your recipient, where he has passed the entries in such a way that he has reduced the input tax credit. Because on one side, he will have the input tax credit. On the other side, the reversal of that invoice is the reversal of input tax credit. And I believe that in big organizations, generally such kind of transaction is regular, and such kind of practice or SOP is followed, where you have to have the cross ledger of your major customer. That can also be sufficient. And one stand you always check that it is not in my hand that I am going to check, because anyway you are not even feasible for you to check that. Let's say you punch 100 rupees as ITC reversal. You don't have the breakup of that 100 rupees. Now I can give any name. I can give that it is a ITC reversal of Akshat by someone says that no, it is a Mehul by ITC reversal. So it is not until and unless you don't have the invoice wise reporting, that is not going to be. Okay, so talking about the customs, as I said that generally they try to cover tariff structure. First of all, they try to streamline the tariff structure. Generally, amnesty scheme under custom is the most awaited change that everyone is expecting in this budget, but unfortunately we do not have that. GST in a mini amnesty scheme is already there. I also try to cover the same, and I believe that you must be opting the advantage for that, particularly in the case where the penalty is certain or the interest is certain. Two major change only in customs. One, as I said, that revision of bill of entry or shipping bill. It may generally happens that whenever you import, then bill of entry revision is possible. It's not like that it is not possible. That for that you have to pay charges also, and shipping bill, the same is the case with shipping bill. But generally it happens that there are few particulars which you have not provided to the customs, and the customs and GST both are integrated department. They integrate their data, and specifically when the data is not integrated, those who are doing the export with payment of tax, they generally suffer. Now they have provided the modalities where you have the option to revise or amend the bill of entry or the shipping deal, as the case may be, within certain time frame. You can do it yourself. Generally what happens that in a case where R&D company or some kind of service industries, generally they are doing the business on a markup basis. whatever the expense that they have incurred, they add certain percentage of markup, and at the end, they are raising the invoice to their parent entity. This is what the general orthodox structure of major entities are concerned. It may happen that until March, they are not sure that what sort of expenses they are going to incur. So they are adopting certain value, whatever is there in their books of account, and raise the invoice. After that, their audit is started, and once the audit gets concluded, it may possible that the cost that they have determined earlier and the cost that they are arriving as of now may differ. And they need to add certain markup to the original invoice which they have raised on the March month. So here they are saying that, or that is one case. And second case is that there is a transfer pricing adjustment, right? The transfer pricing officer will say that, no, boss, you are having the related party transactions. And this is the correct value which you should have opted, and this is not the value. So difference between X and Y may be up, may be down. So whenever there is a true up or true down, you need to adjust the same in your bill of entry or shipping bill, as the case may be. So talking about the bill of entry per se, because export is generally tax free, so we don't face any challenge apart from the refund part. But whenever there is a reduction in the value, it may possible that you count the value on a higher side and pay the custom duty. So what about the case where your value gets reduced? So there is a refund possible based on this provision. You have the refund eligibility on this amendment itself. And since you have amended the bill of entry with the lower value, differential tax that you have paid excess can be refunded. That is the first case. And in case there is an increase in the valuation because of some the transfer pricing adjustment or any other adjustment, you need to pay additional tax along with interest. That is what the change is. And I believe that this is the change which is very welcome change, because whatever action that you need to take, that you have to take on your own. There is a minimal intervention by the department, so you should not you should not waste your time in approaching the authority and getting the clearance and then paying the fees and then getting your work resolved, right? So this is one of the change that is provided. As I said that let's say you have to pay the additional tax, then additional tax if you pay, then obviously you are going to claim the credit, let's say IGST. So what should be the document of availing that ITC? So whatever revised bill of entry that you have filed, because generally otherwise you would have paid TR6 challan, right? But in this case, you have reassessed your bill of entry, and that bill of entry itself will become your duty paying document. As I said, that is a refund will not be challenged in case there is you have paid the extra. And you can provide the additional documents also. Let's talk about a case where there are various free trade agreement is happening between various countries, and for that you need to get certain certificates. SEPA generally we call it. Under the SEPA, you receive certain certificates that if your originating country is providing the certificate that yes, this is the goods originating from this country, the moment you produce that certificate to the custom authority will grant you the benefit and they will not charge any duty. What happens is that generally in such kind of a scenario where there is a delay from the originating country to getting that certificate, and since you have not certificate in your hand, you cannot provide the same to your authority, and you might be having duty payment at the time of import itself. But that document is no, you are not provided. So this provision gives the favor to you by stating that you can provide the additional documents also. It's not like that you can only amend the value or you can have the only amendment in whatever you originally provided. You can have any additional same or additional document, at that also you can provided the same is obviously you are eligible, and which is getting missed at the time when your import consignment has been made. As I said that another change is with respect to provisional assessment. 2-year time limit has been provided. If I summarize and simplify the provision, 2-year time limit has been prescribed. Within 2 years, the provisional assessment will be concluded. The same is further extended by 1 more year in case the same is not being completed. Generally, this will speed up various assessment because in customs, there are many formalities that needs to be concluded. Various samples has been procured by the departmental authority and they get the sample tested, particularly for classification and valuation. They determine that this is the composition and this is the end use of the product based on which you have procured this product. And this takes time, particularly talking about the case where you have a related party transaction, then SVB takes a lot of time, right? So this will speed up all this process. And this is beneficial provision, but only in few of the cases where your case is already on a, I would say the litigation is going on, or there are various other scenario like I have mentioned over here. In this kind of scenario, this 2-year will not be applicable. So I'm talking about the case where generally, whenever you are doing the import, obviously at that time your litigation will not start. You might not have any inquiry where the documents or details has been required from the other foreign country. This is the beneficial where in normal cases within 2-year assessment gets over. So at least you saved yourself from any additional burden of the interest and penalty, because one fine morning, let's say you have imported one particular by classifying under XYZ, but they will come after 3-4 years and say that it is not XYZ but ABC, and indirect tax being a transaction levy tax, obviously the quantum is going to be very high. That may not be your margin as well. Let's take about a case when you are discharging the tax at 18%, but one fine morning someone will say that no, it is applicable to 28%. As we have seen that in case of a motor vehicle or vehicle seats, right? They are saying we are considering that it's a part of motor vehicle and they will to 18%. They are saying no, it is 28%. So there will be very huge amount of liability. Since it is a transaction based tax, we have to be mindful for all such cases. Okay, so that's it all about budget amendments. We are moving towards other recently issued some of the changes under GST. But before that, anyone wants to have any discussion so far as the budget changes are concerned, we can discuss as we move forward. I think we have 1 hour, right?
Yeah.
Shall we move? Yeah. So few of the cases, though I have covered many, but I pick up only important part. Corporate guarantee is the one which is highly discussed recently because of the amended Rule 28.2 and the circular. We all know that the corporate guarantee transaction is transaction between the related party generally. The parent entity is giving the corporate guarantee to their another entity, and based on that, the bank it is giving the finance. 23rd October 2023 is the cutoff date. Before that, there is some provision, and after that, there is some provision. Before that, 23rd Rule 28.2 has been introduced from 23rd October 2023. After that, they have provided the value itself. And value is 1% of the guarantee offered. So this is the value on which you need to pay tax. That is first point. What about before that? So before that, you have to go with the general rule. General rule means you have to determine the value according to your base judgment. That maybe you can have the value generally in transfer pricing, the 0.5% is the value of the corporate guarantee, but that is also subject to various interpretation. First, I would say that litigation will start from the first argument by stating that it is not a supply per se. Corporate guarantee is not a supply per se. It is nothing but a financial arrangement. But rule says otherwise. Rule have already provided the valuation mechanism. By that, they have already defined that this is taxable, and hence there is a valuation provision. So what valuation provision says that circular has been provided in detail. They have provided for a few of the points. Couple of the points, if I discuss, you have provided the guarantee of 10 crore, but the disbursement is only 1 crore. Then on which value you need to pay tax? Obviously on 10 crore. Because what they are saying is the security value, that the exposure total is of 10 crores. And that is the base, that should be the base for valuation, which obviously I do not agree, but this is what the law is and we have to follow. First point. Second point, corporate guarantee may be for multiple years. It may be renewed on a year-to-year basis or may be given for a lump sum year. Whenever the same has been provided lump sum year, 1% per year, if that is provided for 5 year or 7 year, the valuation will be 5% or 7% at the time of supply of that particular corporate guarantee will trigger at the time of guarantee itself. So you will end up paying 5% or the 7% as the case may be in the first month itself. That will remain for the 5-7 years. That is also one of the major challenge. Okay, 1% is not the only value. It may possible that you might be receiving something from the entity. Because I have provided the corporate guarantee, I require certain consideration, and that consideration may be more than 1%. So in case of a more than 1%, the actual amount that is being received, or 1%, whichever is higher in the value on which I need to pay tax. So that is what the provision says. But the very important part when we are discussing the related party transaction is the proviso to Rule 28. Proviso to Rule 28 says that whenever you are eligible for full input tax credit, valuation will not have any practical role to play. And similar provision has been worded under Rule 28(2) as well. So you need to determine first whether the recipient is eligible for full input tax credit, yes or no. If that is eligible for full input tax credit, you can have the any value. Specifically for those kind of industries where construction industries or the healthcare industries where they are not either eligible for full input tax rate or they are into exempt supply, this provision will definitely add the cost because 1% is very high amount, and in such kind of industries, the funding from the parent entity is very obvious, and to expand that operation, they are obviously relying on the corporate guarantee of their associate entity. Sorry? Then also can be zero. Yes. Yes, they have here also they have clarified circular via circular also they have clarified. I have put that slide. You can link the same with secondment issue, right? After the northern operating NOS judgment, we all are fighting that what should be the value in case of a secondment, and people are paying the tax, people are fighting the case, and one fine day the government issued the clarification by stating that when the eligibility of ITC is not a question, then valuation you can play with. So in nutshell, when ITC is eligible, you are not supposed to worry about the valuation part. But the only problem here is that you are saying that you are eligible for full ITC. The department is saying other way around. Department is saying that even if you have some sort of exempt supply, let's say you are having mutual fund sale, that is also an exempt supply, right? Because 1% you have to opt for that exempt supply. So what will happen at that point of time? So I would say that when you are eligible, when you are saying that you are eligible for full input tax credit, you have to read the transaction qua that transaction. You have to determine the eligibility of input tax credit. You cannot determine the qua person because anyway, anyone has to have nominal exempt supply, and by that means if you are carving out someone from that provision, then this provision at all will be redundant.
Not party.
Interest they have clarified. Now, for interest will not be counted for ITC reversal. That is, they have clarified. Sorry? That is the exempt supply. But see, how we are common money પણ આપણે ITC reversal આપણે full eligible ITC કેમ કહીએ છીએ? કારણ કે આપણે એવું કહીએ છીએ કે 42, 43 માં ના. 42, 43 માં કેમ આવે? કારણ કે તમારી exempt supply છે. So interest is exempt supply. We agree. But they themselves have clarified કે ભાઈ એને તમારા ITC reversal માં નહીં ગણવાનું. So even though it is exempt supply, but still we consider that it is eligible for full input tax credit.
If one there is a loan and there is a many person is giving a corporate guarantee. All have to pay.
So this is what I have mentioned, multiple co-guarantor. Multiple co-guarantor. So you need to determine the value proportionately. You need to determine the value proportionately. That is what I have mentioned over here. Talking about 89, 4A, 4B and 9610, I think that is all settled. જે પહેલા આનો બધો ઝઘડો હતો કે તમારે કોઈ જો એડવાન્ટેજ તમે લેતા હોય ડ્યુટી સેવિંગ સ્કીમ નો જો તમે કોઈ એડવાન્ટેજ લેતા હોય તો you need to at the time of filing GST refund you need to calculate other way around. First 9610 is with payment of tax, 89 is without payment of tax. When you are discussing without payment of tax, you need to provide the ratio in which you are calculating your input tax credit, because with payment of tax to certain છે કે જે તમે tax pay કર્યો છે એની તમારે refund લેવાનો છે. But when you are discussing about the without payment of tax, there is set of formula that has been prescribed. 89 ની અલગ હતી, 89 4A 4B ના કેસની અલગ formula હતી, and people are struggling with that. Now they removed that 89 4A 4B and 9610 as well. So far as exporters are concerned, refund struck situation would not arise, at least after these changes. 128A, we all know this, but quickly I will summarize what the scheme is, because now the filing has been started, so people must have opted for the same also. Though I have not practically encountered, I have not filed any SPL 01 or anything, but this is what I believe. I know that is the feedback. Correct.
Calling. Just give the physical copy.
Oh.
So your team is not unclaimed.
Correct. So that is what the common feedback that I am receiving from everyone, that the same, first of all, the same is not started. The moment it started, the people are facing the issue in filing. So as you rightly said, that is the only option. I mean, you have to file it manually, because ultimately the filing and payment is required. So this is what we are talking about. From July 17 to March 20, you will have a interest and penalty exemptions if you pay full tax. That is one thing. What sort of case covered? I would say that every case will be covered in general, except 74 case and erroneous refund. So in case you have received the SOCOS, that can be covered. In case you have received order, that is also covered. In case you are under appeal, that can also be covered, provided you withdraw the subsequent filing. Right? This is what the summary of this whole provision is all about. As I said, full payment of tax is required when you have to pay tax before 31st March 2025. Now we generally see that there is a time limit, right, for issuing of any notice. That's section 73 and 74. Few of the time limit has already been lapsed, few are yet to come. But since 74 is having higher time limit, department is generally tends to issue notice under 74 only. So first you have to defend that it is not the notice under 74, it is notice under 73. But it may take time. So the moment your case will be referred to 74, but subsequently gets covered under 73, then certainly you will have a fresh time limit. And that fresh time limit is 6 months from the date of order passed redetermining tax under 70D. So this is the limited point. અત્યારે તમારે પેમેન્ટ કરવાનું છે, જે પણ તમારું પેમેન્ટ આવતું હોય તમારે પેમેન્ટ કરી, then you have to file these various particular form. The process is also defined. I have covered that. So one point which generally come, that let's talk about a case के कैंटीन रिकवरी ऊपर તમે ટેક્સ પે નથી કર્યું, તો it is not required, but still the interpretation issue is there and department is asking for that. 17-18 માં અને 18-19 માં તમે પે નથી કર્યો, 19-20 માં પણ પે નથી કર્યો, but 17-18 અને 18-19 ની amount બહુ નાની છે. So you go for this waiver scheme and you have paid the same. Now 19-20 ની demand મોટી છે, you are not going into that, you are under appeal. Now the question would arise, whether can someone challenge by stating that since you have paid for 17-18 and 18-19, that means you agreed that this is your liability and hence you have paid. But in 19-20 you are fighting, so 19-20 claim will not sustain. Is that so? No, right? Precedence value should not be there. This is just the mechanism of resolving the litigation. So it's up to me which case to go for and which case to not go for. So any officer will ask such a question, then that you should have the argument that this is not the precedent value you cannot take from any amnesty scheme. Otherwise, the amnesty scheme would be redundant if that had been the case. Few of the transactions kaya cover થાય કયા નહીં, that I have mentioned over here. Certainly 73 વાળા બધા જ cover થશે. ખાલી interest અને penalty હોય, tax pay કરી દીધો હોય, which earlier there was a confusion, but after the circular which clarified all the situation, that is very settled. કે ખાલી interest અને penalty વાળા કેસ હશે તો પણ cover થશે. કોઈ રીટ ફાઇલ કરી હોય તો પણ તમારે જઈ શકો, provided you withdraw that. 74 certainly cover નહીં થાય, erroneous refund cover નહીં થાય. Erroneous refund and demand બંને સાથે 73 આવી હોય. Now this is the lacuna, right? If I want to go for 73, amnesty 73 માં જ છે, પણ મારી જોડે બંને કેસ છે, એની અંદર નોટિસ પણ છે અને erroneous refund પણ છે. Erroneous refund is not covered by this scheme. So I have to have, I can go for this full scheme only. I cannot have the part કે તમે નોટિસમાંથી આટલો પોર્શન છે હું એમનેસ્ટીમાં જાઉં છું ને આટલો પોર્શન છે ના જાઉં. So ideal scenario should be that you ask the authority to break it up. I don't know whether they are cooperating or whether they are providing or not, but for that substantial amount hoy, so you should definitely try to divide the notice into two parts, and one part which is for the tax payment you can go for amnesty. Other than that you can fight for litigation ahead. So various forms are there. खाली जो notice होय,
there is a many notices coming from 17-18 to the interest is payable on. The interest is only pending.
Yes, that I have mentioned na. Demand of only interest or penalty.
The provisional mail, this is the provisional interest of 17-18. You need to
17-18.
No notice are.
So that's what I'm saying. The time period is beginning. No, that is not covered. That also I have mentioned. Only interest. That is not covered. That is not. No, that is not. So this is the process. I am not going into detail that how this process will go. Nothing but the જે જૂની સર્વિસ ટેક્સમાં પણ હતી સબકા વિશ્વાસ સ્કીમ હતી, સેમ એનાલોજી ઉપર છે. You have to go, then they will review. They can issue the notice. જો એ નોટિસ તમને લાગશે એના પોઈન્ટ હોય તમારે જવાબ આપવાનો. જો તમે રિપ્લાય સેટિસ્ફેક્ટરી લાગશે તો એક્સેપ્ટ કરશે, એલ્સ તમારું રિજેક્ટ થશે. And in case you reject, then obviously litigation નો પાર્ટ તમારો ત્યાં ઓપન હશે. કરેક્ટ, પછી તમે અપીલમાં જાઓ. There is one also recent welcome change with respect to 16(4). ઘણા ક્લાયન્ટ ને આ કેસ આવ્યા હતા કે ભાઈ ઇનિશિયલ પીરિયડમાં જીએસટી માં એમણે પાછળથી ક્રેડિટ લીધી હોય. So they are saying that it's okay if you claim the credit up to 30th November 2021 for the case of 1782 2121. ત્યાં સુધી તમે કોઈ પણ credit લીધી હોય, then will not go. They provide the procedure also for 16.5 16.6 કે જો સપોઝ આ રીતનો કેસ હોય તો તમારે ડિપાર્ટમેન્ટે શું સ્ટેન્ડ લેવાના. સો ઇન કેસ જો નોટિસ ઇસ્યુ નથી થઈ તો નોટિસ ઇસ્યુ કરશે જ નહીં. ઓર્ડરમાં આપી દીધો છે તો they can definitely get the rectification of order. અપીલમાં હશે તો અપીલ you need to withdraw in case you are already, because you are already covered under this provision. So this is the limited change. And as we discussed, this circular 2110, that is the valuation in case of import of service from the related party. So in case of a related party, full eligible ITC છે તો it's okay. તમે નહીં કરો તો પણ ચાલશે. Full eligible ITC નથી, then only you need to determine the value and accordingly you need to raise the self invoice.
Appeal case માં there is one nation is there, 16 and another is that. Then appeal is filed. So what is the scenario for that?
To withdraw that appeal.
To clear on other point.
No, you are saying that.
Fine.
Correct.
There is other also there is ineligible ITs or everything is that. So that portion I don't want to withdraw.
Okay.
Then 16 is also there. So what is the plan? Can Commissioner give this 16 is directly or then?
So he will give the benefit of 16.4, that is the delayed claim of ITC. That part will continue. Ineligible ITC will continue. Correct. So at rest part, that is the ineligible ITC as per them, but you are saying that it is eligible, that part will continue.
Okay.
Yes, certainly. So to avoid these 73 and 74, because everyone knows that they generally bound to receive the notice under 74 only. 73, you are hardly receiving any notice. And to avoid this, they introduce one new section that is effective from 25-26, that is 74A. The time limit earlier was, the order time limit has been defined from the annual return date limit, right? And they are saying that before order, at least you will get the 3 months time. And so generally શું થતું હતું કે જ્યારે તમારો ઓર્ડર ની છેક ટાઈમલાઈન પતો આવે ને ત્યારે તમારે સોકોસ આવતી હતી. And that's why we are seeing, right, એક સાથે જો બોમ્બાર્ડિંગ થાય છે SCN ની અત્યારે, એ because of this provision. So now they have amended this, and 74A, which is the newly introduced section, they are saying that 42 months from the due date of furnishing annual return, ત્યારથી તમારે સોકોસ આપી દેવાનું. અને જ્યારથી તમને સોકોસ મળશે, 12 months from the date of issue of the SOCOS, order આપશે, which obviously can be extended. So this is the new provision. What is the new provision is all about? It is common for all fraud, non-fraud, બંને કેસ માટે, that is very well covered. જે એક રિસ્ટ્રિક્શન હતું કે ભાઈ 74 માં તમને જો કોઈ નોટિસ આવી હોય અને તમને એનો ટેક્સ પે કરો તો એની તમને ક્રેડિટ નથી મળતી સામેવાળા રેસિપિયન્ટને. So that is obviously gone because there is no fraud or non-fraud case. And I believe that at least stability would be there, because you don't have to defend your case first whether the time limit માં છે કે નહીં. સૌથી પહેલા તો એ જ ક્વેશ્ચન અત્યારે આવતો હતો કે that is time bound or not. So that is the main issue that may be resolved. There is also this section 11A has been provided recently, as such not relevant directly, but I would see from a broader perspective where some sort of industry of yours, of your client, may be such that they are, due to their general practice or the industry practice, there may be a short levy or the interpretation issue. And on that front, there is a disconnect between what should be the proposed and what should be the actual tax liability. It mentioned that it allows the government upon satisfaction and recommendation of GST Council to issue notification exempting payment of tax. So person-wise person, this may not be applicable. This only be applicable in case one association goes and association have this say that this is the lacuna. We are not paying the tax, but you are saying that it is taxable. So kindly grant the exemption to us. So government also want to, but under which provision? That provision has been provided. That under the shelter of this 11A, you can have the benefit. And on similar line, we all know since last few council meeting that as it's where it is basis, the provision has been provided by the government. એટલે તમે જે કર્યું એ બરોબર કર્યું છે, હવે પછી નવું. This is what they want to say. So, ત્રણ interpretation નીકળે છે એના. Suppose different rate હોય. There is a 5%, some taxpayer pay 5% and some pay 12%. Now government is saying કે આની ઉપર 12% applicable થાય છે. So 12 કર્યા એને તો 12 કર્યા જ છે, 5 કર્યા છે એને કોઈ ડિમાન્ડ નહીં થાય. This is what first interpretation. Exemptions. Government is saying કે ભાઈ this product is exempt. This product is leviable to 12%, but few believes that this is exempt. તો જેણે exemption છે તો એને લોકોને granted એમને કોઈ પાછળથી tax pay કરવાની જરૂર નથી, 12% વાળાને 12%. But the problem is that due to different rate, the government is some taxpayer have paid 5% and others have paid 12%. Now it is clarified that 12% applicable. So in that case, 12% વાળાને તો okay છે, પણ જે 5% જેણે pay કર્યા they have to pay additional 7%. So this is what, in case there are lot many GST council clarification in any of your case, a client case, if that is fitting, then you need to be mindful of this change. In case of a mixed interpretation, there is a differential duty that you need to pay. Monetary limit, this is all fine. I think we can directly move to IMS and ISD. IMS, I'll quickly go through. You must be knowing about the IMS, but limited point. I'm not going into the legal provision and what the IMS is all about. I'll only say,
જે આપણે 77 માં ડિસ્કસ કર્યું ને, લોકો નીકળી ગયો કે મેં ભર્યો તો બધાને ક્રેડિટ ના મળે વાળું. પણ હવે આ 2B જે આવી ગયું છે, ધારો કે અત્યારે મને નોટિસ જે આવી છે લેટ્સ સે કે આ પીરિયડ પ્રમાણે 42 months માં આવી ગઈ છે, બટ વન અમેન્ડ તો કરી નથી શકવાનું બીકોઝ એનો ટાઈમ પતી ગયો. તો આમ બી હું ભરી 74A માં બી ટેક્સ તો એની ક્રેડિટ કેવી રીતે?
એટલે તો રિડન્ડન્ટ થઈ ગયું ને, એટલે તો કાઢી નાખ્યું છે. એટલે તો એ હવે એનાથી બ્લોક ક્રેડિટ માંથી કાઢી નાખ્યું છે.
ફ્રોડ હોય નોન ફ્રોડ
કરેક્ટ. So limited point on IMS. We all know that is anyway it is going to be mandatory in near future, and IMS is nothing but generating the 2B in a filtered way. Your 2B may contain some of the credit which you may be claiming at a later point of time, but while adopting the IMS, your GSTR 2B will be such that you only claim the credit which is relevant and applicable for this tax period. You park the credit other way around, and that will be available for taking action from the subsequent one. This is what the limited purpose of IMS is. See, this is, I would say, that transaction-based action that you need to take. You might be having many invoices. Up till now, you may be doing reconciliation manually in Excel, or you may be maintaining the data in Excel. But once the IMS has been enabled, that is not possible and that is not advisable also to do it manually. Because not only you will be prompted a notice, various notices has been issued in case your data gets mismatched between GSTR 3B and GSTR 3B. But after the introduction of IMS, adopting the technology is not an option. You have to go for technology, be it any small software, be it any big software, maybe that is relevant to you or not, but adopting the technology is must once the IMS comes, because one cannot have the complete record of the invoices that you may kept as pending. Further, till now it is only one way. You have to accept or reject. It may possible that they might come out with two way. The original system that GSTR 1, 2 and 3 that has been enabled. This is nothing but the mini version of thereof, right? The problem would arise for the credit note. Because the moment I am talking about the industry where there is a lot many credit notes, specifically for such FMCG and pharma industries, where there are lot many credit note has been posted. You cannot have the track record of such kind of a credit note which gets rejected by your recipient until unless you have the technology. So that is the one and main point. Because થશે શું કે જેવી એમની ક્રેડિટ નોટ તમારી રિજેક્ટ થશે તો તમારી લાયબિલિટીમાં એડ થશે. Now you have the liability from the Excel sheet which is not getting matched with the liability that is reflected in GSTR3. So in any way you will not have the record that how much tax that I'm actually paying vis-a-vis the tax which I'm supposed to pay, right? So this is the only point that we should also think for adopting the technology. We have to go on the technology front. We also have to convince our client that this is nothing but you need to foresee future and then you have to take a call. And last few minutes I discuss about the ISD and we end. ISD we all know that is going to be mandatory from April 25. So practically as of now I would say that very limited time left for those who have not yet started. First point is that ISD will be applicable for multi-GST and entity party. Obviously, you need first what steps you need to evaluate. You need to evaluate first that what sort of common credit that you are receiving. For that, you need to do vendor analysis and expense analysis. You need to find out that this is the common credit that you are generally receiving. The problem does not stop there. The problem would arise because it may possible that whatever you have identified common, that may not be the common for all your business unit. It may possible, I'm just giving one example. Let's talk about a case that you have some marketing expense at HO. Obviously, you are going to claim that invoice in IST because your marketing expense will be common for all the entities. That is fine. But it may possible that you might be having certain software or the SAP related expense in HO, but the SAP functionality is being used by only few of the business units. Then the moot question or the rather real issue with ISD is that distribution of the ISD to only limited entity. In case you want to distribute to all, that is very well sorted because you need to distribute based on the turnover. I'm not going into detail. There are a lot many issues with the distribution as well because it may possible that you might not have the turnover during the last year. Then you opt the turnover of this quarter, but that may not be the relevant turnover. That may be the correct base. Do I have any option to adopt any other strategy other than the turnover? Maybe let's take a case that I am distributing the expense of the SAP. Certainly the correct distribution should be based on the manpower that is using that SAP. It may possible that one of my Kerala branch is having only one person, one guy is using SAP there, as against my Maharashtra branch, we using my 90% of the users are situated there. But my Maharashtra unit does not partake any contribution in my total turnover, whereas my Kerala branch will partake the contribution in having turnover. So there are a lot many issues, but we are not going into that much integrity. We are, since discussing the overview of the ISD, I am just highlighting few points which you should consider. So as we said that distributing the credit is most important, and for that, what most important things that you need to do to prepare your accounting system, SAP or ERP in such a way that records the recipient state at the time of entry itself. What happens that, let's talk about a case where you report the common expense, but after when you are filing your GSTR6, at that time you are identifying that this common is for whom. at that time it is difficult to find out the common expense, and department can also one fine day come to you and say that boss, you have distributed to XYZ, but it is not related to XYZ. So that is first case. Second case, we generally use to expense out all ineligible credit. We are not distributing, we are rather not booking, forget about the distribution. Here they are saying that you also need to distribute the ineligible credit as ineligible credit, and then you need to take action according to the recipient state. That is also one of the point which we should need to take care. Third, even though one particular unit is having only exempt supply, there also you need to distribute the credit, because it is not like that you can only distribute the credit where you have the liability. It is not in your a pocket to determine pick and choose. You have to follow the rules, and according to the rules, you have to do that thing. So rest you all know, I am not discussing about when you have to file GSTR 6 and all. We all are professional. We all know that is very well settled. Most important thing is that when you adopt the ISD, you have the leverage of local tax being converted into IGST, right? That is the additional benefit. If you are smart, you can get the benefit of that, because the moment I have your local CGST, SGST, I may not be eligible to use that, or I may not be eligible to encash that. But by routing through the ISD, I have the leverage to get the benefit of ISD from that distribution.
But that is state who is distributing. Or that is only CGST assistant. How can they?
So that's what here I have mentioned, that you can, if you are distributing to, let's talk about a case where your Gujarat HO and Gujarat ISD is there. When Gujarat HO is distributing the Gujarat ISD, you obviously going to distribute CGST and SGST. But let's talk about a case where vendor of Gujarat is raising the invoice to ISD of Maharashtra. Then what happens that he will charge IGST, and accordingly you can transfer the credit. You have the leeway to transfer the CGST, SGST distribution as IGST. IGST is anyway going to distribute IGST, but CGST, SGST can also, you can distribute to IGST provided it's in the other state. That is what has been mentioned over here.
There is a best example would be rent of
Yes, certainly.
C and S put, and you will give it to Maharashtra as
So that's what process flow wise, if I am discussing, that's what I have mentioned, that to first identify what is the common services which are used or consumed by various locations. That is the first point. You need to communicate to your vendor customer that this is what the new GST number, IST number on which you need to raise the invoice, particularly vendor, customer is not required. Then reconciliation is obviously certain thing. Reconciliation in GSTR 6A, you need to reconcile and all the input tax credit to be distributed in the same month. That is also one thing. So you have to be mindful for that. That is also practically we need to check that when you have not received the invoice, but that is being reflected in 6A, you need to distribute the same. So that would be very limited time we will have to distribute the same and take a call. And certainly the distribution will not be more than that is available. And as I said, the ineligible can be routed as ineligible only. These are the few of the examples. Some of the open questions, whether can I have the multiple ISD? Law does not bar me, but practically not advisable, because multiple compliance is not something which anyone wants. So that is also one of the things, because it may possible that I have HO at Ahmedabad and I have marketing office as Maharashtra, and I have both the ISD. So that can be possible, but not advisable. RCM, we already discussed that RCM will, the main entity will pay and then distribute. Still, even if you provide the ISD number to your vendor, there are many vendors who will raise the invoice to your common main HO only instead of ISD. That is the teething issue we will face during the initial period. So what should be the way of distributing the credit through that? after ISD, let's say now I have the cross charge. First of all, we all need to understand and appreciate that even after the ISD, cross charge will continue. So ISD and cross charge will not have the option in absence of ISD. I can have the cross charge. In cross charge, I can have the ISD. Circular 199 clarifies everything. So I think that is very certain, and we all know internally generated service needs to be cross charged, and third party invoices needs to be distributed through ISD. But let's talk about a case where third party invoice is being received at my HO instead of ISD, and whether HO can distribute the credit to other location by a cross charge, or they need to raise the invoice to ISD. Had it been the case that he may raise the invoice to the ISD, what about the credit eligibility to HO? Because one would say that you have not received the service, or maybe the service is not attributable to HO and you are not eligible for the credit. That may be the question which we need to discuss.
54 sub-rule
1A. Yes. So that is for this purpose only. And obviously, you also need to you need whatever stand that you are taking, you need to maintain throughout the year. You cannot have the change in the ratio throughout the year, because you may have the ratio. Let's say you are adopting the turnover of one particular state based on the previous financial year, but later on the turnover in that particular state or branch gets reduced. So distribution may be uneven. So I think that's all I try to cover to the extent possible. Hope that is justified, and you have you might resolve the questions that you have, but still I'm okay to have questions. Online audience also, and you guys also, you can have the question, we can discuss.
Members, if you have any question, you can ask to the faculty by unmuting you.
Sir, एक बीच में पूछ रहा हूँ, आपने ऐसे plant और machinery and plant and machinery through. So, let's say there is some pharma company in which they are going to put some machinery over there and some foundation. And they have to create a clean room around the machinery, because that is a basic requirement. Otherwise, the machine will not operate. So that clean room is again, you can call it as a immovable. So, will this change of plant or machinery or plant and machinery change our orientation?
So, sir, I would say limited point is that first, plant and machinery is the definition of the plant and machinery is not only cover the machinery per se, it also covers the structure and foundation. But as you say, the clean room can never be considered as structure and foundation. First point. Second point is that now when you are claiming, you want to claim the credit of that clean room, that is the structure per se, then there is no plant as of now. First of all, the plant word is no more. The word what is available in the GST law is plant and machinery only. So you cannot say that this is my plant and machinery. So that will be very dicey. But the only thing that that you can defend is that first it is on your own account, whether that facility is for you or you are letting it to someone and then they are doing something. That is the first point. And second point is that you need to see that anyway that can be covered under plant and machinery or not. But if you want wording from my side, I would say that is very difficult post this amendment, because that can anyway not cover under 75 CM 70.
No, please.
Okay.
I request Akshat Bhai to give a moment to the faculty. Please have big round of applause.
Thank you.
Thank you, members, online members and physical present here for interactive session. Thanks. Thanks to Hiren Bhai for
Thank you.
and
Thank you.
Thank you.
Thank you.
Thank you.
I'm stopping the screen and ending the session. Thank you all.